What's up, guys, and welcome back. This is Starling Trades. I've been missing in action for about 2 weeks now. I think the last time I made a video was just after NFP, and I have been away, kidogo, but I've not been away from the charts. Taken up a few beatings here and there in the markets, and yeah, so today I want to cover what I've done for the past 2 weeks, the mistakes that I made in the markets, and yeah, because I did make a couple of mistakes that did cost me kidogo, and yeah, to look at what I am looking at in the coming weeks, right? So let's just dive right into it before we look at the outlook for the coming week. So mistakes that I made in the past 2 weeks. The biggest one was breaking a couple of my rules and trading emotionally. I did 2 weeks ever since NFP, the markets had been a little choppy, at least according to my system. So I really shouldn't have had that many trades. Um, yeah, but I saw myself break a couple of rules, especially with gold, and silver. I think with you as well. Yeah, so I did have a couple of trades where I broke my rules, and then that boiled down to me, reacting. I'm giving in to my emotions. So I forward into a couple of trades, and then some did pan out well. The last time we spoke, I was down about 3%, and yeah, some of the trades did pan out well, and I was able to get myself back to break even, and then that feeling of euphoria led me to trading more, which I lost, and then I revenge traded. I did some revenge trading and lost even more. So yeah, so I was down about 3%, and then I pulled myself back to break even, and then I melted, broke my rules, and then now I'm down about 5.5% on two of my accounts. So yeah, it's been a tough-ish 2 weeks, but not because of the market. That's something internal, It's something you have to consistently and continually find a way of dealing with. So yeah, I think on Friday I did take Thursday and Friday. I think I did take a break away from the charts just to reevaluate and calm down. The markets will always have opportunities for you, right? And yeah, so yeah, mistakes are part of the game. The important thing is to learn from them. I'm still working through it, and I know I will prove myself, right? Yeah, so let's look at what we have had over the past weeks. That is speaking from a macro fundamental perspective. We did have CPI, which was the most important news for this week on Tuesday, for the US dollar at least. And we saw inflation cool a bit, coming down from 4.2% in May to about 3.5% in June. This combined with the fact that NFP came in significantly softer. Was it 2 weeks ago? Yeah, NFP had come in significantly softer than expected. I think half. Yeah. So that sort of put the brakes on the rate hike narrative that had been pushing, the dollar higher. And yeah, that pricing of the Fed got me a bit off guard, but yeah, it's time for me to reevaluate. So we did have CPI, and as you can see, inflation cooled significantly, from 4.2% to 3.5%. That's a 0.7% drop in inflation. And as a result, the markets sort of seem convinced that the rate hike narrative, or the rate hike story, is over. Um, Myself, I'm not that convinced that the Fed agrees. If the recent FOMC meeting minutes are anything to go by, And I think I listened to Kevin Wash testifying. When was it? Kevin Wash was testifying a few days ago. Yeah, I think it was on Wednesday, Tuesday and Wednesday. He does have quite a headline stance on inflation, right? And although we've seen inflation cool from 3.5%, from 4.2% to 3.5%, don't forget that this is as a result of the market absorbing the recent or the June cooling in oil prices, right? So in June, we did see oil, I think it was a 30% drop in oil prices. Um, yeah, we had seen almost a 30% drop in oil prices. Almost a 30% drop in oil prices in the month of June. And since then, this has unwound, and we've seen oil prices pump back, I think, about 22% since the June lows. That is in July. So, this is as a result again of the reignition of the tensions in the Middle East. So, we could see that cooling inflation narrative um, come to a halt, right? We could see inflation start to go back up. Cool. Again, with Trump, it's sometimes it's tricky to know what he's going to do. He does often sometimes chicken out. Yeah, so we'll see what happens in the markets. So yeah, still don't forget that while inflation did cool from 4.2% to 3.5%, this is still above targets. Yeah, it's quite a ways above the inflation target of 2%, and the Fed remains concerned a lot about the inflation. Actually, let me just open up the recent FOMC meetings that we had. Yeah, so we had this FOMC meeting minutes. It was on 8th, yeah, 8th of July, and if you can have a look, um, yeah, participants anticipated that inflation would remain elevated in the near term, and then to begin to decline as the effects of tariffs and energy price increase wane. But they judge that the inflation risks, risks to inflation, still remain tilted to the upside. That means they are still more concerned about, um, they're still significantly concerned about inflation, right? Um, Still very concerned about inflation, but the labor market is not really a concern for. It's not really concerning right now. They note that unemployment has remained relatively stable, and it's likely to remain so. Right. So although we saw a softer labor market with NFP in the last few weeks, yeah, it's not really a very big concern, right? Doesn't really change the entire macro picture. It's not like the jobs market is necessarily weak right now. It's just not as strong as it was before. And I think they even revised the previous month's number lower. So it's simply not as strong as it was a few months ago. It's not that it's weak, yeah. And a slowdown is not necessarily a breakdown. So for me, that is what I've been looking at from a macro fundamental perspective. Now, what do I expect to see in the coming week or in the coming weeks? Let's start with gold, right? So gold has been pushing lower, and for me, as far as I'm concerned, I think gold is still on a downtrend. For me to change that stance, I think I need to see gold break above these highs, right? Why not this one? Because it's this high uh, has not led to the formation of a lower low. It's not broken below this low. So this is still an internal high as long as it's not broken below this previous low. So for me to say that gold has broken the structure, it will need to break above 4380s, I believe, or yeah, almost at 4400, and then with it push higher maybe. But as far as I'm concerned, I think gold is could still be on. I think gold is still on a downtrend now. but I'm not positioning myself to take any gold entry right now. As you can see, it's a bit choppy for me, uh, and it's already given me a few beatings in the last 2 weeks. So I'm not really in a hurry to have entries for gold. Uh, I'm sort of on a wait and see stance with gold, and that applies for silver as well, most probably right now. Although for silver, if I go down on a lower time frame, I can see the possibility of me taking this short. And yeah, so for gold and silver, I'm still bearish. For the dollar index, I'm still bullish. We saw on the monthly time frame. Let's do the weekly, right? Uh, I'm just on silver. I'm not on the dollar index. That's why I'm wondering what's happening. On the monthly time frame, we saw it break um, above these highs where it had been consolidating for a while, for almost a year now. We saw it break above these highs, and so we are seeing it pull back into this about into the 100 level, retesting that 100 level. And so yeah, with the macro fundamental story telling me that the story for holding rates as is right now, or even pushing rates higher, is not yet done. So we are likely to see the dollar index push higher. Yeah, I don't have a position right now. I know it seems that as if I do, but I don't. But yeah, I'm looking at it pushing higher. As you can see, it's a nice clean flag that's retested down to the about 100 level, which also is about a 61% retracement from these lows, where it had consolidated from that beautiful low and then pushed higher. So we're likely to see it pushing higher to again this 1.5 level, with the likelihood of it pushing it up of pushing higher to the about 102 level. uh, Psychological numbers, right? Yeah, so we're likely to see it pushing to the 102 level. Yeah, and for me, I will be taking a position. I'm waiting to see if it does a small pullback, and then now I can execute from here. Somewhere around here, I will be executing, right? Um, Now for oil, let's look at oil, right? Because oil markets are looking forward, and oil markets are looking a bit tricky right now. Let's go the daily time frame. We did have this beautiful flag, which was I think a 78% retracement level from this lows. Yeah, did touch the 78%, 78.6% level, and we have seen oil bounce back up from those June lows, and it did consolidate for a bit around the $80 level, and it did break out on Friday right before market close. It did break out, so I'm waiting to see if it pulls back into this consolidation zone and then maybe push higher, if that is if the war narrative goes on if the war narrative in the Middle East goes on, right? Which seems likely right now. Tensions have been flaring up um, quite a lot in that past couple of days, so we could see oil push low, push higher, and if we do, then I will be looking for I would be looking to have a position. So we'll be looking to enter. So maybe we could see oil push a bit higher, then come back and retest. At which point I would most probably look for a position. So given that I'm bullish on the dollar or the dollar index, I'm bearish on EU. I'm waiting to see if it pushes higher to retest this 1.5 level, which was the previous level of support. Waiting to see if it does push to retest that level, and then I could look for a short position, maybe to test these previous lows, all the way to these previous lows. Um, for the pound dollar, it looks a bit choppy for me. As you can see, it's been a bit choppy. So I'm not really looking for a position right now. I'm waiting for you to give me a clearer picture of where it's headed. Yeah, I do still have maybe a bearish bias, yes, but would have to break below these lows for me to even think of looking for a position on it. So I don't really have a position I'm looking at. I'm leaning more bearish, but it's a wait and see game right now for me. Right? Oh, there's something I forgot to cover, the yields. So we've been seeing yields pushing higher. The 2 year yield has been pushing higher. I said I usually look at the 2 year yield mostly because it has more of an impact on currency movements than the 10, the 20, and the 30. Yeah, we did see it push lower post CPI. We did see it push lower all the way to the 4.1 level. But generally it's still on an uptrend. So yeah, we're likely maybe to see it pushing if the narrative holds. Yeah, if the rate hike narratives still holds based on the macro fundamental data. Based on macros, we could see them push all the way to about 4.4 in the short term. So yeah, that's something that's still giving me my bullish bias on the dollar, right? So but my mind is still open to change, right? So for a more bearish dollar, we need to see weaker CPI, another weak NFP. So we need to see inflation coming in, inflation cooling further. We need to see the job market start to showing cracks and falling yields. That will give the Fed a dovish stance, right? But as long as we still have sticky inflation, yields are rising, we have hawkish comments from the Fed as well as high energy prices, and with energy prices likely to push even higher, especially with the tensions in the Middle East continue to flare up, right? So yeah, I'm cautious about remaining married to my bias. By the way, in the last 2 weeks, I think another mistake that I made was remaining married to my bias. I didn't quite accept that sometimes pullbacks happen. So I stuck with my bias too much, and yeah, so I don't want to predict the future. I just want to see what happens and then respond to that information, right? Yeah, so yeah, as a summary, so I still believe the rate hike story is not over, right? Um, gold with gold pushing lower, oil prices pushing higher, yields pushing higher. I'm a little less convinced that the Fed is likely to switch to a dovish stance anytime soon. Yeah, but what matters for me in the coming week is to follow my rules, follow my process, and manage my risk. Oh, by the way, yeah. Despite the fact that I did take a couple of hits from the markets in the last 2 weeks, I managed to manage my risks properly, and that's why I didn't even blow a single account. I still have my accounts. Yeah, I'm in drawdown, but yeah, had I not managed my risk, then probably it would be a different story. Yeah, so I have to remain managing my risk and staying adaptable, right? With any new information, then it can either reinforce my bias or I can switch based on the data that comes. Have to remember to trade what you see and not what you think. It's something that have to work on and to protect your capital, right? Remember what I have shared. They are my own ideas and opinions and not financial advice. Please, 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 please do your own research and analysis and make sure you stay patient and protect your capital, right? So I will see you on the next video. May the best be